Welcome to the FX Options Weekly Outlook, a weekly podcast series hosted by Jason Ayres, a top instructor, trader, and founder of OptionSource.net. Join Jason as he discusses the latest trends in the Forex market with a look ahead on the US dollar versus the major currencies using the most commonly used technical indicators.
Well, hi there and welcome to the ISC FX Options Weekly Outlook for May 10th, 2010. As always, this is Jason Ayres of OptionSource.net. Let's take a look at a weekly chart of the US dollar index. This is a great way to gain perspective as to how the US dollar has been trading against a basket of currencies. Now, the dollar index traded into our 84.85 box last week after a very quick move higher against most of the major currencies. We suspect to see a retracement back down to test support in and around the 82.83 focal zone. With a strong uptrend in place, the 88.90 box becomes our next near-term target. The daily chart reflects the very rapid push higher, and after such a quick move, once again, we do suspect that the US dollar index will retest the strength of support down at 83. A near-term target to the upside sits at 86.5, 87. The US dollar traded as high as 107.5 before slipping back to find support in and around the 104, 105 focal zone. Now, we may see a retracement lower as support is tested down at 102, 103. We are now back to looking at the 107 to 108 focal zone as a major overhead resistance and target to the upside. The US dollar slipped lower against the yen as seen here in the YUK. The 90.91 held support, and we are now looking for the possible start of a trend reversal with the 93.94 level being a key overhead resistance. Failure at 90.91 brings the 87.88 box back into the picture as the next logical target to the downside. The US dollar made a major move higher against the euro as the 79.80 box was tested as resistance. But signs of indecision here suggest a possible pullback down to the 76.77 focal zone. The 83.84 box provides a logical target to the upside. The BPX now hovers above the 67.5 focal zone, which now acts as a key support for the US dollar against the pound. Now, the 70.71 box provides a logical near-term target for a continuation higher. However, we need to see support hold at 67. The US dollar staged a major reversal against the Australian dollar as the AUX now hovers above the 112, 113 focal zone. After such a major move, it is not unrealistic to expect a retracement back down to test support at 110, 111. The 115, 116 focal zone provides a target to the upside. Let's take a look at a few of our key points. First of all, the US dollar index extended beyond 85 but quickly reversed. We expect a pullback after such a large move. Support at 82.83 lends credibility to a continuation higher. The CDD made a large move last week, trading as high as 107.5. Although a pullback is expected, this appears to be a major trend reversal to the upside. The YUK dropped as low as 88 before bouncing. 90.91 is an important support level. Failure to hold here is likely to result in a retest of 88. The EUI hit 80 last week and now shows signs of a retracement lower. We may see a pullback to 76.77. The BPX broke beyond the 67.5 resistance. This level will now act as support. Another thrust higher will have us targeting 70.71. The AUX hovers at 112, 113. We suspect a retracement after such a robust move, which could see support tested at 110, 111. 115, 116 remains a key overhead resistance. And this has been your ISC FX Options Weekly Outlook for May 10th, 2010. As always, this is Jason Ayres of OptionSource.net. Thanks very much for joining me this week. We'll see you here next week.
Thank you for participating in this week's session. Please join us again next week. For trading ideas, exchange rates, webinars, news, and commentary, visit www.fxoptions.com. Become an OptionSource.net member. Visit www.optionsource.net. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in US dollars and have a European-style exercise.